So imagine folks still commuting to a store to send $200 to their families back home, and this would happen. They would do this Friday after Friday. Led us to the inspiration of building something that was specifically tailored to Latinos in the U.S. Because these folks wanted a human experience, which is that what they got in physical stores. So we realized that WhatsApp, in a way, was already part of the habit of sending money. But essentially what we're doing is selling USDC in an open exchange that is available 24/7. It's all done programmatically. So for us, it was clear that we had to use USDC. But today, I believe that local stablecoins don't make sense.
Hello, everybody. Welcome to another episode of Frontera de Podcast, where we analyze what's happening in crypto in Latin America. And today we have a really special episode. We have Manuel Godoy, co-founder and CEO of Felix Pago. We were just talking before the recording that it seems that Felix Pago is like the hottest startup in crypto in LatAm, and maybe one of the, the hottest in the world of crypto, because you are embedding crypto solutions with stablecoins with a real use case that is remittance in the largest remittance corridor of the world, that is the Mexico. Starting in Mexico and the US, that it's around of 70 billion, give or take. And Manu, how are you? Thank you for coming to Frontera.
Oh, Abraham, thank you for inviting me. Super excited about the progress that we've made, and humbled by your invitation and like you said, the news about a recent fundraise and the recent good news. But like I was telling you before, we're hyper focused on continue building and excited to accomplish our mission.
Amazing. So yeah, first let's start by those big news. You raised $75 million from QED, leading the round. Could you tell us what's the build-up to get to this? Because you've been building for 5 years. I saw your post on LinkedIn since 2020. You met your co-founder at Wharton, I think, doing an MBA. Could you tell us the story of, this is a photograph, right? And it's like a successful photograph, but we'd love to know about the picture that preceded the photograph.
Definitely, more than happy to do so. And like you said, it's a picture, and it's an interesting one, because yes, it's always great to see the news of a fundraise, partnering with an amazing fund, one of the funds that I believe is top fintech around the world, one of the top fintech funds around the world. But it definitely hasn't been a nice linear curve up to here. It's definitely been very, very bumpy, and we've definitely gone through different cycles of the startup. But yeah, it all started with my co-founder and I, Bernie, who, both of us as immigrants realized we sort of like knew about from different experiences around the issues that you have as an immigrant in the US. In my case, I came here to study engineering in Southern California, and I couldn't get a student loan in those early days. And I just had to figure it out and hack my way through that. And but it's one of those things that you just realize it's just how it is, right? Why would I get a loan if I don't have a credit history in the US? Similarly, a few years after that, my mom calls me one day because she was frustrated trying to send money to my grandma back in Venezuela, who used to live in a rural town. We couldn't get money to her, but it was something very specific to my home country. And again, like, we just had to figure it out, have to hack our way through that. But it's in my head, and these and other different stories were sort of like forming in my head this scenario around lack of access to good financial services as immigrants, or connecting or sending money to Latin America. So when I met my co-founder in business school, we both had this sort of like understanding of the pain, and at the same time this drive and passion to try to solve it. But we had a very general idea about some of the issues, and we just wanted, we knew that we wanted to build something. So we actually really, from the early days when we met, we started really like forming a formal meetings actually every week. We went out for breakfast every Thursday to discuss about potential ideas. And so it was natural for us that we wanted to build a fintech company. And we were literally sitting at a class in one of those occasions in which a professor shows a graph illustrating how remittances have been growing exponential rate for the last 50 years. The punchy line was that at the time we're looking at $90 billion. This was 2019 numbers. Of the $90 billion, around 80% of that was still sent from retail stores here in the US, from physical stores in cash. So imagine folks still commuting to the store to send $200 to their families back home, and this would happen. They would do this Friday after Friday. Start realizing that we're talking about hundreds of millions of transactions every year, tens of millions of folks still not trusting the digital products that existed at the time and that still exist today. And that sort of like inspired us to take a deeper look. That's when we went out and tried to figure out the problem. And funny enough, because we were MBA students, we thought that the first idea that we had in our minds, we thought it was going to be a solution. And it was a very humbling experience because we realized that we didn't know absolutely anything about the industry. But one of the things we did well, definitely, was going out and talking to users and standing outside Western Unions in Philadelphia. And the idea was to test the MVPs that we had at the time, the ideas that we had, but also try to understand the pain points. And it was really then when we started falling in love with the problem, because you start realizing that these folks come to the US with the sole purpose to take care of their families back home. And that led to that sort of like those deep insights that we started earning led us to the inspiration of building something that was specifically tailored to Latinos in the US. Because these folks wanted a human experience, which is what they got in physical stores. So we realized that WhatsApp, in a way, was already part of the habit of sending money, because these folks would snap a picture of the receipt that they get from the Western Union and send it over WhatsApp to their family member in Mexico, Guatemala, Honduras, in the Latin American countries. And we said to ourselves, why not build this on WhatsApp, emulate the experience that happens in the store, build this human transaction, this human experience, and finally enable that the convenience of a digital payment. And that's what gave footing to what the product is today, which is a WhatsApp-based platform for Latinos to send money. And since then, like I said, it's been quite a ride. We've been lucky enough to partner up with some of the best investors in the world. And now we can say that not only we have product market fit, but I believe we can actually disrupt the industry.
So, Manuel, I want to get into way more of this and navigating the idea space and so forth, but give us a sense for the magnitude of what Felix is, how many users do you have, how much volume are you moving, just so the audience is fully situated with how important this product is for the remittance corridor across Latin America.
Definitely. And for context as well, Abraham, you mentioned that we started in 2020, but we really, like in 2020 was when we were testing this MVP. So we really went to live summer of 2022. Since then, we've moved almost $2 billion to Latin America. Last year alone, we sent $1 billion. We grew 12x year over year last year. Last month, we sent almost $200 million from the US to mostly Mexico, but also Guatemala, Honduras, El Salvador, Dominican Republic, and soon enough, some other countries. We have a few 100,000 customers all over the US. And yeah, we continue growing at an exciting pace. Just last week was Mother's Day week, which was a huge week for Felix. And we continue growing double-digit percentage growth month over month. So we're definitely making a dent in the industry.
That's huge, man. That is super exciting.
Dude, I just wanna pause to like size these numbers. Moving $200 million, like if we multiply that by 12, you'll be moving around of $3 billion a year, like rounding errors and whatever. That's 5% of the remittance corridor, around 5% of the remittance corridor between Mexico and the US. And that's huge. I mean, congratulations for that, because obviously you'll keep growing. That number will keep moving up. And it's really exciting to see this like trailblazer, because something that we discussed before with Bernie and you and I talked when we met is how everybody thought that what you were doing was stupid. Yeah. In the sense that I'd love to hear the story about how everybody told you dude, don't even try moving money with crypto. It doesn't work. You'll be eaten by fees. There's not enough liquidity. Just don't start. And now, I mean, obviously, it's like ingenuity and ingenuidad in the sense of being ingenious and naive, you know? Could you tell
Yeah.
that story on how that was such a contrarian bet back in 2021, 2022, moving money with stablecoins and crypto?
Definitely, and it's interesting because I I once heard this sentence from a person that I admire a lot, but we definitely were in that uh, area in which audacity and craziness match, because like you said, we wanted to we pushed through trying to build this, but we also knew that we were a bit crazy to do this. Um, so yeah, and it's interesting because it all started with the users. We knew we had to build something that was really tailored to the user's need, but we also need that we had to solve something that had a price point that made sense for the users. It's interesting because we started building this with the idea to charge $0 for remittances, and the users didn't trust that initially, right? So that was one of the early iterations where users realized that we were building a service that had to cost something, and I love that the users were willing to pay for that. But in order for us to make money, we knew we had to have such an efficient infrastructure on the back end that it allowed us to continue investing those potential profits into the business and building something more robust. And for me, like I said earlier, I'm originally from Venezuela. So when you grow up in a country in which the currency gets destroyed by the central government, it's very natural to understand crypto. It's very natural to understand the power of accessing a decentralized value, the power of moving money seamlessly, and the power of accessing that 24/7 and being able to move money and pay to anyone really. So for me particularly, it was very natural to understand that crypto had to make sense. Crypto had to be a part of this rather. And so at the beginning, we were literally looking at all the options on how to build infrastructure, and we started scraping the data, right, the crypto data from different exchanges and from different potential partners. And we started realizing that yes, actually crypto was going to be a potential huge enabler because what crypto actually does for us is allowing us to access the open markets for trading cross borders without having to find an intermediary. I think about it. We're getting stable coins in the US. We're moving that stable coin to Mexico, and we're moving just bits, right? We're not moving actual money. What essentially we're doing is selling USDC in an open exchange that is available 24/7. It's all done programmatically. And when you look at the trades, we're looking at trades that are actually very close to spot to interbank rates because it's an open market. And at the time, we're also looking at traditional partners like banks or FX providers, and because they have so many intermediaries along the way, you ultimately realize that you're going to get essentially a bad FX, right, when you're buying pesos or buying other currencies in Latin America. So by tapping directly into crypto, even though when you're small you have to pay some fees, we realize that in the mid run or the long run, we're going to be actually tapping into smaller trading fees and have good unit economics. So after understanding the data, understanding the speed in which we could move the money between cross borders, it made perfect sense. So we were very bullish on the stablecoins at the beginning. It was very challenging because, and it still is, but it's definitely more friendly now because of the regulatory concerns, working with different partners, working with regulators that weren't convinced about the use of crypto. So we had to navigate through that to make sure that we could use crypto, but ultimately we knew that it was going to be the best way to build the most optimal infrastructure for money movement across Latin America.
So one thing I want to ask you here, Manuel, is how has this entire sort of stablecoin landscape transformed since you started working on Felix? Because there's been a massive shift. We recently had some US legislation that was shot down. But run us through what your vision for stablecoins began like and how it's transformed. And then also, where do you see that heading as well? I'm really curious to get a sense for the future of stablecoins and what are you seeing on the horizon and how that might relate to Felix and startups like yours?
Definitely. And I'll tell you from Felix perspective, but also from like the general market perspective, because our perspective, I think, is I mean, we have a very specific use case, but the potential for stablecoins, I think, is much bigger than that. And I'll tell you a little bit more context on how we started this. So we knew crypto had to be a part of Felix, but also we knew that we couldn't be facing some of the risks around, especially around the volatility of pricing. If we were to use Bitcoin, which obviously has much more liquidity than many other tokens, if we were moving $300 for a user from the US to Mexico and it's taking 30 minutes to settle, we couldn't bear that risk. We had to make sure that we were giving the best price to the user, and we had to keep that trust. So for us, it makes sense to use stablecoins, but at the same time, back then there was a litany of stablecoins that actually is much more different than today, because you had like programmatic stablecoins. You have stablecoins that were maybe a little bit more shady, where you didn't know how it was actually protected on the back end in terms of where they invested the dollars. So for us, it was clear that we had to use USDC, right? Because it's a stable coin that is minted by a company that is in the US, that is audited by US companies, that is showing that it's actually that the fiat is invested in US treasuries. So to us, it was the safest possible way, and we went through that route. What's interesting is that now, obviously, the whole universe is much different, like you said, and we're seeing many different options. Some of them actually share the yield with the partners. Some of them may have more or less liquidity in the countries in which we operate. So definitely, what we see today is much more optionality for us to move money between countries. And regulators, not precisely regulators, but I think more like banks are seeing regulators, and this is banks in the US, are seeing regulators taking a more open approach. And so banks are more open to work with companies that use crypto on the back end. It was very tough for us to open bank accounts early on. We actually, even though we opened some bank accounts, we actually had a bank account, Silvergate Bank, which famously went down. And like Silvergate and other two bank accounts that we had were shut down. The risk is much lower today for that. So companies should definitely take a closer look about how to leverage crypto, because the risk is lower. But the way we see stable coins, and I alluded to one of them, is definitely tapping into yield. And this is something that some companies are taking advantage of, in which you pass this yield to the user, or you can monetize this yield and have better pricing. There's different strategies to do that, but I think that's one key aspect of it. The second key aspect, which is something that is much bigger, as we know in Latin America and the rest of the world, is access to the US dollar. Because essentially, USDC particularly, but stable coins in general, or US-based stable coins, US dollar based stable coins, it's a treasury, it's a tokenized treasury, right? And what you're doing is moving that treasury value around the world. That has tremendous value, because folks like all of us know here in Latin America appreciate a lot having US dollars. But locally, there's many obstacles to have access to US dollars in the countries in Latin America. So that's why we're seeing a lot of a lot of companies tapping into the opportunity of giving folks locally US dollars, because they see that as a safeguard. And beyond that, and those are the two things that Felix is tapping into. But beyond that, in terms of the crypto in general, the stablecoin industry in general, you see things like tapping into DeFi lending, for example, directly with stablecoins. You see things like tapping into working capital pools that get moved at the speed of the internet, like virtually on the blockchain. So if you're able to actually get instant settlements in stablecoin, that means you're reducing your working capital needs. Because in the current world, which is going to be the old world very soon, in which you have to use SWIFT, you have to sometimes pre-fund some of the flows that are moving between countries. But now with stablecoins, you're essentially settling much faster, and we're doing this with many partners around the region. So all these things that are starting to evolve in the stablecoin world are going to untap a lot of value, and essentially the customers and the users are the ones that are going to be able to get the value out of this.
Manu, I want to keep talking about the market size for stablecoins because you're tapping into one of the most exciting sectors in technology today. We can look at, I'd like to just mention two main things or two data points that show how stablecoins are the most exciting technology with AI today. In the Stripe sessions, the Collison brothers, basically, they address two topics, AI and stablecoins. Those were their main things, their main focus for Stripe for the next years. It's also super interesting because you're positioned right in the conjunction of those two technologies because you mentioned that the migrant loves or needs like this human touch, hence the name of Felix, right? You're not called, I don't know, Redstone or whatever random name. It's the name of a person, right? And you are powered with this chatbot that basically you can have a lot of data and do a lot of things. So really interesting there. So that's something more like anecdotal that two of the most important leaders in the fintech industry are talking about stablecoins and AI. And the second one that it's, I think, even more exciting, the Treasury published an essay last week saying that, and Scott Bessent also went to the Congress to say this, that the market cap for stablecoins by 2028, they projected to be $2 trillion. Today, the market cap of Tether and USDC joined this around of 210 billion. So these are the type of multiples you want to see as a founder, as a technology investor, an industry that will grow 10 times. And it's not an estimation of, I don't know, like a random crypto punk in Twitter saying that this is going to moon. This is actually like Scott Bessent, the Secretary of Treasury, saying this. What's the market size that you're addressing? Because you started with the beachhead market of the person in the US, the migrant, and like just money flows, pay-ins, payouts. But now you have a lot of surface area because you have hundreds of thousands of users. You can provide them like financial products built on crypto. I would love to hear what's the market size that you are sizing and where that market size for Felix will come from. It'll be other financial products, a wallet. I'd love to hear about that.
Yeah, definitely. Great question. And yes, it's so exciting what's happening with stablecoins, really. And I do believe that is such an inflection point what we're seeing with stablecoins. It's one of the best inventions possible in the last few decades. Obviously, taking into account that AI is definitely transformational, and obviously the internet before that. But super excited about what's happening with stablecoins, and the fact I think in some of those statistics, I think we're seeing now that stablecoins is like the eighth. Like if stablecoins were to be like a sovereign country, it's like the eighth largest or something like that. Largest holder of treasuries around the world, which is huge, right? The implication of that is huge. So obviously right now we're solving remittances, right? We're hyper focused on making sure that we have the best product possible to send money from the US to Latin America, and everything on everything that is optimizing the money flow is in a way hidden from the user. The user just wants to use a platform that is very simple, that is, in the words of our users, that is fast and easy, right? That's what they want to see. And our job is to optimize that to give the user the best price possible, right? The best effects or the best fee possible. And that's why crypto is helping us, right? But it's more like a backend type of infrastructure for us. What we're seeing definitely is that as we build this trust with the user, like you said, like we purposely named the platform Felix because we want to make sure that the user talks to us and feels like we are their companion when it comes to financial decisions. And if you take a step back and try to understand who the Hispanic in the US is, we're talking about 60 million people between first, second, and third generation folks in the US that are becoming more than ever the most important ethnicity in the US. And we saw it in the last election where there was a lot of talk from political experts in the US that the Hispanics actually were the ones that moved the election to Trump. because there was a huge shift of Hispanic votes from Democrat to Republican. And the fact of the matter is, if you see the last 10, 15 years, when you see growth, a GDP growth in the US, and segregated by the ethnicity, like Hispanics, Indian immigrants, Asian immigrants, you put all the ethnicities, the segment that was the highest contributor of GDP growth in the US was the Hispanic segment. And there's obviously a point around this related to immigration, obviously, but also the fact that these folks are more than ever accessing the middle class and have more purchase power. So giving those folks access to financial services is huge. And we see an opportunity there. So that's why you also see an increase in remittances, because these folks are able to send more money back home. So we see an opportunity as well of helping the beneficiary of remittances. And all of these have to be powered by crypto or stablecoins. And it doesn't need to be actually front-facing from the user. We see, depending on the country, we see a world in which maybe you can actually send stablecoin or send USDC or USDT. But in some countries, like for example in Guatemala, the quetzal is such a strong currency, such a stable currency, that those folks may not want a stablecoin, right? But it doesn't mean that you cannot give them a wallet that is quetzales when the user sees it, but on the back end, you leverage stablecoins to generate yield and move the money more seamlessly around the world. So we do see ourselves as a companion when it comes to financial services, building a financial platform that is really tailored to the needs of these users. It has to start with remittances. It's the gateway for us to earn their trust, but it can go beyond that. It can go to credit. It can go to wallets, both in the US and in the region. And beyond that, there's other financial services these folks don't have access to today that may not be related to money movement. Like for example, in the early days, folks were trusting us, and they still do. Folks trust us that much that they send us on WhatsApp directly, like, hey, can I send a package with you, like a physical good, which is something that these users do a lot when they live here, when they send things to their family. They also want to send shoes that they buy in Target, for example, and they do that today in the physical world. So we also want to enable all the solutions that are really causing pain points today for our users that can even go beyond financial services.
And I think this is such an interesting point, Manuel. I'm from Guatemala originally, by the way, and I'm very familiar with the poor financial infrastructure that we have in the country, right? One of the things I, in fact, wrote a piece a few years ago on comparing what it was like to take a loan out at my local bank versus using a protocol like Liquidity, which allows for 0.5% interest rate loans on your Ether as collateral. So I'm really excited to see you guys verticalize that entire pipeline and financial suite for people, right? Especially in a country like Guatemala. One of the things that we've been talking a lot about recently as well has been kind of local stablecoins, and particularly on this podcast. And I'm curious because you mentioned that you might see a world where, say, a user in Guatemala has quetzales, but on the back end, it's actually a yield-bearing US dollar denominated stablecoin. I'd love your thoughts and reflections on local stablecoin, say, local like Mexican peso or quetzal, et cetera, which one do you see as being sort of a priority for companies like yourselves and others operating across the region?
I would love for us to because I have a strong opinion today. It doesn't mean that it won't change in the future. So maybe we can circle back maybe in a year or a couple of years from now and see what's happening. I may be mistaken, but today I believe that local stablecoins don't make sense. And why? Essentially because, first of all, like I said earlier, one of the most powerful things around US dollar stablecoin is that it's access to the dollar. Folks in Latin America want access to the dollar, right? And even like you said, like in Guatemala, Meta did this, well, back then it was still Facebook. They did this pilot in which you would send USDP to local wallets, and it failed catastrophically, because if you're sending a remittance to somebody in Huehuetenango, Guatemala, which is a small rural town that you may know about, folks want quetzales, right? They want to spend in the local market. There's nobody accepting USDP payments or stablecoin payments, or even for that matter, US dollar payments. So in a way, I think because of that, it's a huge value. I don't see tremendous value on having a Mexican MXNC or Mexican stablecoin or Quetzal stablecoin as something that people would want to adopt. I always allude to the case of the Eurocoin that Circle issued. I'm not too familiar with the numbers, but I haven't read anything about huge success around Eurocoin. And the euro is actually a currency that folks do want to have as backup in most cases. So that's one. Number two is, which could become valuable, is that really when you think about money movement across Latin America, it's really not that big, right? The most money flows go from US to Latin America or Latin America to the US, and then folks obviously transact in US dollars. So I do think even if there is trade between Mexico and Guatemala, for example, in the blockchain, I would still see this being powered by USDC. So I don't necessarily see a world in which local stablecoins take off. I may be wrong, but we'll see. So we see Felix. Felix wants to leverage stablecoins, US dollar stablecoins, as much as possible. We do see a world in which we're looking into companies that are interesting, that could actually generate yield, not just from treasuries, but from local CETES, for example, in Mexico, which is essentially tokenizing CETES. But that doesn't mean we'll use a Mexican coin. It means that we'll use a different vehicle to maximize the yield we can get. And obviously kind of like counteracting and measuring the risk we can get from that. But that's how Felix sees it today, much more bullish on US dollar denominated stablecoin than local stablecoins.
Manu, this is such an interesting point, and we've explored it deeply in Frontera. And there's a thing that I understand where you come from, but I don't agree on the point. And I'll tell you why. When I was at Bitso, I started like analyzing this potential MXN stablecoin, and I had several chats, and I was like in the same spot that you are today. Like, they doesn't make sense. Local stablecoins doesn't make sense. But after analyzing a lot the market, I realized that basically global money, when you transfer money, one of the main things is liquidity, right?
Yep.
So how do you obtain liquidity? And the main point, I think, for local stablecoins, where they'll succeed, is where do you want to have liquidity between the US stablecoin and the local rails?
Right.
At a blockchain level or at a bank level?
Yeah.
If technology keeps evolving, that'll happen at a blockchain level.
Yeah.
Eventually.
Mm-hmm.
And that's when a local stablecoin makes sense.
Yeah.
And I say that because whenever you have a Mexican peso stablecoin and you have enough liquidity, the only thing that you need to have like infinite liquidity between like the Mexican financial system and DeFi is a deep enough market in Uniswap between USDC and the Mexican stablecoin, right?
Yeah.
I completely agree that they doesn't make sense to hold, but they make a lot of sense to payments. So
yeah,
it's really interesting to see how this thing will evolve at the end.
And by the way, Abraham, I do agree with that. Like in payments, it could make sense. Like, why would you hold Mexican pesos if you can hold it in your bank anyways? Which is, by the way, not too different from the US. Like, I have stablecoins in the US because Coinbase pays me yield, and also because Kush, to the example you were making about lending, Coinbase gives you loans collateralized by Bitcoin in stablecoin, and to me that's super powerful.
Yeah.
But it's very specific use cases in the US, right? So to that point, I definitely agree. Like it could make sense on payments, not on money transfer. Like I said, like I could be wrong. That's my thinking today, but maybe we can make a bet. I don't know, offline and see what happens.
I think part of our thesis is also that like all money will move on crypto rails,
right?
And so if you extend that out, is inevitably we'll see quetzales and pesos and so on.
Yeah,
right.
Yeah,
and I think particularly like cross-border B2B payments, I think you could see being settled on in local stablecoins. I think being able to tap into a lot of the financial primitives that are unlocked via DeFi, I think, is the other thesis for why you might see local stablecoins. So I think partly the way we think about it, or at least in my head, is retail won't be doing necessarily today day-to-day purchases with local stablecoins.
Right.
We will see it. I think we'll see local stablecoins flourish when we'll do cross-border payments settled through B2B payments, and then when people want to tap into kind of the DeFi primitives that are unlocked through local stablecoins. So that's really exciting. But I think honestly, my reflection here is I think we should probably do like a bit of a debate and a wider conversation with people here to dive fully into this. So
I agree.
Awesome. So Manuel, I think one of the things that you mentioned right at the start was what the key insight that led you to start Felix and the way that you did and so on was kind of the conversations with users. So I'd love for you to give us a bit of a rundown for what are the other bottlenecks or challenges you're seeing a lot of your users that you already currently have using Felix, and how are you thinking of addressing those problem sets for your users as well? And, you mentioned payments is where you're starting, but what does that expansion for Felix look like?
Yes, and I love the question because there's so many, which is why I'm excited about waking up every morning to try to solve some of these issues. Some of these may take longer than we think, but excited to try to solve them. There's two in particular. One big one that I think we can all appreciate is just how cash is still so prevalent, right, in the region, and a lot of folks especially actually more in Central America than in Mexico. Mexico's becoming more and more digital every year, really, for us. But folks still want to pick up their cash, right, in Guatemala, Honduras, in El Salvador, and we want to solve that. We believe that that's not fair, right? Cash was definitely a great invention, right? But we'll go beyond that. So we want to make sure that how we can solve for that. And what's really making us very unique is that we try to obsessively understand the user, I think, more than anyone in the industry. And when we make these trips to talk to users, they still believe that going to a physical location to pick up the cash is easy. That's what they trust, and they want to feel it. Sometimes they actually have the bank accounts, but they prefer the folk in the US to send it in cash, right? They collect it in an actual bank. They get the cash and then they deposit the money back into the account. It's such an interesting behavior, right? So they want to feel it, right? So we know the way to solve this is not to just let's give them a stablecoin wallet and they're gonna love it by default. It's not that. We really have to understand the user. We're very much in the early innings of understanding the beneficiary and their habits, but we want to solve that piece of the pie for sure. Another one, huge one, but it's both in the US and in Latin America, is access to credit. And access to credit, the problem is mostly around this person is not that digital, so it's really hard to underwrite them and to give them a risk score because they don't have a credit score in the US, they don't have a credit score in Latin America. So how do you measure them? So that's the first hurdle. Has nothing to do with crypto, but it's just a reality. How do you actually make sure that you loan money and you're gonna get paid back, right? I always say that credit, it's easy to get pro market fit with credit because a lot of folks want the money. It's hard to get the money back. But where it gets interesting is actually on accessing DeFi, some of the things that we've talked about before, to actually give the user a good rate, but that still allows Felix to monetize on the back end, given the risks of this user that may be less digital than average. So those are the things that are really more exciting too. Is again, like everything is on the back end, everything is infrastructure level. At the end, we want to give the user the financial tools that they need, but very excited to solve some of these because it's not going to be straightforward. We want to be creative about it, and we're working towards that.
And one thing that you mentioned there is feeling money, right? So in Guatemala, every quincena, people go and they stand outside the bank for 2 hours just to cash in this physical check that their boss gave them, and then they cash it out and they walk away with cash, or sometimes they don't even have bank accounts. They just walk away with this like wad of cash, $200 worth in their pockets.
Yeah.
And I think that feeling, because I think ultimately it is just about okay, how do I feel that I'm having a very similar experience, even though it's being powered by
Yes.
Felix, I think is really powerful insight, because so many people have tried to tackle this remittance problem and it has not been successful. One last question on my end, and we'll probably get wrapping up. I'm sure we'll want to add another one in there too. But how do you think about DeFi and its role in Felix? So you mentioned you want to sort of have it in the back end, powering a lot of your infrastructure and allow you to still have a sufficient sort of business model, leveraging a lot of DeFi tools. But what are the DeFi tools you're really excited by? We've seen Wildcat Finance, for example, that's an under collateralized lending protocol recently take off. That was powered by Wintermute Ventures, for example. But what are the DeFi protocols that you think have a lot of potential to drive real world adoption? I mentioned Liquidity, which I think is a really, ETH powered 0.5% interest rate loans, but what are the other DeFi protocols you're looking into and excited by?
Yeah, definitely. And it's still very early for us to understand where we're going to tap into in terms of DeFi specifically. What it gets me excited is really, again, abstracting this complexity from the user to give them what they need. If they need a loan, Felix jobs on the back end is to find the best way to fund that loan, right, at the most economical rate possible, which is exactly the same that we're doing with remittances, right? Our job is to build that extremely efficient infrastructure on the back end. So that's how we see DeFi. We're very excited because we see the opportunity as consumers ourselves. We see the opportunities that it has in tapping some of these networks. The way we see it too is very similar again to how we built the remittances infrastructure. Is we want to tap into the most stable infrastructure possible. Ethereum obviously is something that we're looking into with good eyes in a way, but it's in general like infrastructure are built on rails that are safe, that are not too risky for us or for our users. But like I said, it's maybe too early for me to say which ones we're seeing. We're just excited about knowing that there is a lot of opportunity, and we're gonna tap into that.
I'm really excited to see how that lands with you over at Felix. I think there are Coinbase uses Morpho, for example.
Yeah,
there's sort of a number of different.
I love it as a consumer, right?
Right.
But still don't know if infrastructure is going to work for us. Still have to see.
Totally.
Yeah,
Definitely. I think that it's really exciting to see how the DeFi mullet comes to fruition with fintech in the front and DeFi
yeah.
in the back. And Manuel, I want to start closing this episode. It's been one of super fun. And we've talked a lot about how are you doing this retail play, how you went to the shops where people were depositing money, understanding the flows. And something that it's also really exciting is that you were pioneers in this stablecoin remittance infrastructure. Remittance is the beachhead market, but at the end is money flow, and money flow is huge. And you can see it like liquidity, you can see it as transfers, you can see it as payments, but it's a huge market. And I just want to excite the Frontera community with two things, because Felix, in my optics, is not just a retail company. And I don't know how you express this, but something that people might not know, and that's why at Frontera we make the best research, but you have some of the most important partnerships in the industry. You've partnered with Nu, so basically the 10 million users of Nu in Mexico now have access at your rails in Felix. That's huge. Congrats. And something that got me more excited than your round was that you partnered with Spin. For people that don't know, Spin is the fintech arm of Oxxo. Oxxo, if you want to see it like, depending on how you can analyze it, is like a convenience store, but they are also the largest bank. They have 23,000 stores, and each of those stores is now like a bank branch. They've been growing like crazy. They have 30 million users, around of 8 million active users, and you've also partnered with them. So you have this retail part where you have contact with the user, that basically that's the play in fintech, owning the relationship with the user, and Felix, like the person, the bot, owns that. And in the back end, you have this infrastructure that obviously it's going to have like fewer margins, smaller margins, but a lot more volume. I just want to congratulate you for that. And I would love to understand how these two things play, because I have a hypothesis, and I'll tell you after you say it, like your optics. But you're growing a lot in B2B with the largest and the most important partnerships, and also you're growing with retail with increasing your user base. So how does these
Mhm.
two
Yeah.
things come by?
Yeah, no, great point, and appreciate you for commenting on this because it's definitely an exciting thing that's happening within Felix. I always say that we also have product market fit with these partners precisely because of some of the things that we're saying. But we're still retail, we're still direct to consumer. That's our bread and butter, and that's what these partners actually appreciate because we're building such a magical experience for the sender in the US. Uh, and these folks in Mexico and now even more in Central America, other countries like you mentioned Nubank, you mentioned Spain, but also have a huge partnership with Mercado Pago. We have other local banks, smaller banks that are also very exciting, although maybe less flashy, but also very exciting. The fact that they know that their users are going to send a WhatsApp message to the person in the US, and the person in the US is going to seamlessly, without downloading an app, without going to a store, send money via Felix is magical, and all of us get the value. We get users, they get deposits. So that's where the powerful relationship comes from, right? It's a definitely a win-win relationship, but we still focus on that direct to consumer. Obviously, we have to productize the B2B2C portion of it so that it's a seamless integration. It's easy for the developers to integrate with. The fact that everything is powered on WhatsApp makes it much more simple. Um, so again, we're focused. The majority of our growth still comes from actually from word of mouth today, like folks in the US recommending their friends and family about it within the US. But these other sources of growth help us acquiring more users, but also creating that brand, that visibility for the end receiver, so that they can also trust that if the money is sent via Felix, they can trust it. So it's exciting to see, obviously, that this works. Some of these relationships are going to be announced very soon in Central America as well, and very soon also in other countries in South America. So very excited about that.
Manu, congrats for that. I see a lot of flywheels of these B2B clients bring a lot of liquidity. You can make money move faster. Uh, Retail brings a lot of profit and monetization surface area. I don't know, super exciting the everything that you're building at Felix. Finally, we managed to do this episode of Frontera. I think it's gonna be one of the best ones of this season. And Manu, we'd like to start closing. Something that we always ask people that come to Frontera is please provide an insight that it might be in your pitch deck, it might be something that you have conversations with investors with your team, that whenever you tell that to people, they are just surprised that that's happening for the Latin user or in Latin America.
Great question. Well, a big one is actually something that happens quite a lot. Is just how important is remittances and for both the sender and the recipient, and this is illustrating in the numbers. Our users send an average of over $1,000 per month. They send almost every Friday, so almost 4 times per month. Imagine, I mean, that to me, and I mentioned this to VCs a lot and to folks that may not be that as close to the remittance industry in general. And it's so surprising to them because imagine sending $1,000 every month. That's a lot of money, even if you're making, um, 6 figures in the US. These folks are making on average $60,000-$70,000 per year. These folks work in construction, in the farms, in the restaurant industry. The fact they're sending 20-25% of the paychecks Friday over Friday, it's something that is very, very admirable, in my opinion. It's something that it really, again, makes it worth it to work on this every day. It's something to appreciate. And again, like I said before, it's only growing, it's only getting started, so it's exciting to see as well.
Yeah, definitely. And so bullish on that because everyone talks about how AI will kill all jobs but those like the plumbers, the farmers, the construction workers
yeah.
that they're making even like they have better wages that I don't know, people that went to Ivy Leagues or stuff, right? So
Yeah.
really interesting to see that. Manu, where can people find Felix? Where can people find you? What's the best way to use the product?
Yeah, of course. Please visit felixpago.com. You can put your phone number there, and it'll direct you to WhatsApp, to our WhatsApp line. You don't have to download any apps. It's literally all through WhatsApp. And yeah, please, I'll invite your audience to use the magical experience of Felix.
Amazing. Perfect. You can find Kush at 0xKush. Also, you can find me at Abraham CR. Obviously, subscribe to our newsletter. This week, we're going to publish a super deep analysis on everything that we discussed today. We're making the best research about crypto in Latin America. And thank you for coming, Manu. See you next time and see you around. Thank you.
Thank you for having me.
Thanks, Manu. Ciao.